So welcome. We're going to be talking about your wealth account and specifically the automatic Millionaire Advanced Wealth Accumulator. So I just want to do a little review with you here on the wealth account itself. It's a very important step. Wealth account is in fact a money magnet, and it's designed to create an automatic situation for you to build wealth. So let's just quickly do a review on this. And as you know, this is in my book, but it's also part of this program that we've done. So, wealth creation made easy. Let's have a look at the first slide. And this is your income coming in. And your income can come from various sources: wages, commission, tips, or whatever. This account here is known as a transfer account. This is just a little check account or a way of transferring money. We're using an example here of someone with about $400 a month coming in. And this is after all the expenses have come out of your business. So if you have a business, you've already claimed all the deductions out of your business. We're now creating wealth within you. And if you have a job, then that's how that will probably look. And we use a transfer account so we can build this thing called a wealth account, which is just really a cash management trust. I was just looking at the paper there. They're paying 6.2, 6.4, 6.8. One group's now paying 7% on a cash management trust. It has certain conditions and rules. It's quite simple to get over 6% with no fees. This wealth account is designed to create a money magnet for you, to build wealth so that you can ultimately build little satellites off and build your wealth. The little account down the bottom of the transfer account is your key card. It's a cash card. The reason it's a key card is because it's very easy for you to get money, saves you carrying lots of money around. And this is the money that you will use or tend to use just for food, your out-of-pocket expenses. This is your spending money, if you like. And the bottom account down the bottom here is a check account, which is really your operations account. This is the account where all the money has already been spent. Every dollar that you've earned usually has already gone before you've got it. And the real game we're going to play here is this wealth account where savings go. So we're using the transfer account to automatically put the money in the various accounts. There's 3 of them. The transfer account is just a way of transferring that money. You'll notice we just introduced a little line here called not linked. We don't link the accounts together. And the reason we don't want you stealing money from one account to the other. Most people, 95%, get all their money mixed up and they don't know where they are. It's a big problem. And the challenge that's for them is they never really know what they've got. They've either got too much money or not enough. By allocating in the special accounts, this money down here in your operations is already spent, and the money in the key card is the money you're going to live on, and the real game, as I say, is played up here in your wealth account. Your wealth account is designed to leave a legacy, to build wealth, to create your destiny, your future. Thank you. Let's have a look at this wealth account and see what it's made up of. We use the wealth account to build property, fixed securities, and equities, and that spells the word PIE, P-I-E. And how we divide the pie up determines the absolute return that you end up with in your long-term investment strategy with diversification. 80% of your returns will come based on the allocation of your pie. So all our income and business income will come into this, and the minimum of saving 10% per year, per pay or per week, per month, however you get paid, is the intention here. Thank you. You'll notice that real estate is one of your satellites that you come off here, and this satellite could be a real estate investment, and you'll notice the arrows going both ways, so you're getting rent coming in and mortgage payments going out. Rent coming in, mortgage coming out. The reason we do this is that we're going to have a statement account, and that statement account becomes your tax return information because it's there showing that income. It's very clear to observe, very easy for your accountants. Often we might have a separate bank account for this particular transaction, and I'll come to that later. Interest coming in from investments could come into your wealth account. Tax refunds could come in. Shares can be bought from your wealth account, and obviously income coming in by way of dividends will come back into your wealth account. Business income can come in. In other words, out of 5 forms of income, different income streams can come into this. Thank you. All tax-deductible items can come out of your wealth account. Negative gearing, accounting fees, expenses, tax super fund investments, And in fact, any investment that will help you build wealth, including perhaps even our program or any advanced program, anything else you do with us, or any expense that you have that can create wealth for you. I believe that a laptop computer, which will get a double deduction from most probably if you use it for business on the current law, and this is made, could come out of the wealth account. That would be an expense which is quite acceptable. Okay, let's see what else we got. We've already discussed a fair bit of detail about redraw facilities and AB loans and how to make your housing loan legally a tax deduction, or parts of it that way in certain circumstances. This should be done out of the wealth account and to some degree causes a little complication. And the complication is that some people have redraw facilities as their wealth account, and some use the transfer account as their wealth account, as a redraw facility. It is a complication, and I like to keep it separate if I can, so we can see the money. One of the difficulties you've got on redraw facilities is all the money goes in and you never know which is yours and which is someone else's. And so for the small amount of fees involved, I actually like to keep it separate, because the fees are small in the big picture. We're talking about hundreds of thousands of dollars in profit in the long term. Thank you. Showing you how to run a business. Why is this as a heading for you is that this is in fact the key card, but more importantly, the check account. The check account, which is your operations account, shows you how to create all your overheads and business expenses. Let me just go one forward on that one, Shane. This one here. This is the best example I could show you. With $2,600 coming in a month, $1,000 going in a month into your key card, and $400 going in a month into your wealth account, that's your $4,000. Of the $2,600 that comes in each month, and there it is showing you, some months you have high expenses and some months you have low expenses. Do you see this? So you get paid weekly, fortnightly or monthly, and you get bills that are monthly, weekly, quarterly, and in some cases annually, and therefore throws you out of whack. And the reason we want to get you into this kind of system is that we want to get you getting ready to have a business, because those people who can't run their own personal affairs usually can't run a business. So all this cost, housing, transport, medical, education, all those miscellaneous costs that would be personal expenses, you can add a credit card to this amount so you don't get caught out not having enough money or being short. And what we're talking about here is having a little credit card attached to your check account. And the credit card, what that does, that creates, if you like an overdraft facility, a facility to get used to the idea that you're running a business. And in this case, it's just a credit card. And all it's designed to is to utilise these cases when you need some more money. At the end of the 12 months, there's no money left. It's all spent, because the real game is played up with the wealth account. This key card, cash card, is really just for food, personal care, fares, gifts and stuff. Monthly living expenses, and you'll notice they're not linked. This is not designed to have you live off the smell of an oily rag. It's just to get control of your money and to know where you are. A lot of people get very concerned with money. It's a very emotional issue, and they're often, when they don't know, it causes more stress than when they do. Some people know and they don't want to know. And I'm going to suggest to you that it's very important to start taking responsibility for your money. And although it's a very simple system, I found the last 20 years this has been one of the most powerful things we've done with clients. And we have some very special rules like the non-linking of accounts that helps that work. Thank you, Shane. You can't steal from one account and put it into the other. In other words, the idea is not to do this slipping across here and here. If you do, at least you consciously know you are. If you need some money urgently, you know you've just taken the rent or you've just taken the money for the registration on the card. All this is about, this operation, is to have no more surprises in your life, to have total control of your money, to be in charge of your life. Thank you, Shane. So when we look at the whole thing, it looks like this. Big mess of things. What's going on here is above the line are all tax-deductible expenses, all above the line. So tax-deductible items, bookkeeping fees, financial fees, disability insurance, life insurance, anything that you're doing, life insurance should be out of your super fund, so they're all tax-deductible expenses. And anything below the line is your real cost of living. And what we really want to do is help build this wealth. So that's the basis of this, yes? And that's done? Okay. So we go on to this one, Shane, we'll have a look at this. So if you have a look at your automatic millionaire sheet, and those people watching this video, perhaps you could even have a look at this, it would be good. So this section's on the automatic millionaire advanced wealth accumulator. And what this is really about is to see if we can take you to the next stage, to bring you to another level. And I'd like to start this off, if we could, just with what the banks are up to here. And basically all the banks want to have a slice of you. And understanding how this cake works, and basically looking at this little story here, if you can imagine this is a cake, and each one of the banks want to take a slice. And we're not promoting any specific banks here, we're just using the normal ones that are around. Let's get another one of these, just one that perhaps works. NAB, ANZ, and it doesn't matter which bank, and whoever bank you're with, we're happy for you to be with, and you can use your wealth account with anyone you want. What it's great to do is to have relationships with many banks, because ultimately this is a relationship thing. So we want to understand how the banks look at you, and we want to go with the flow. We're not going to go against what the banks are up to, we want to be with them. So each bank will expose themselves to a certain risk. Does that make sense to you? And you want to do that. Now, in the past, you may have had it, well, they keep sending me this stuff and I'm very careful, I just throw it in the bin because I'm smart. Well, I don't know how smart you really are in that. We have a word for it. You never buy an umbrella on a rainy day. Well, we've talked about this. Why don't we do that? Because there's always a big queue. They run out. They're usually expensive. You never go to the bank when you need some money. You only go to the bank when you don't need it. They lend to me all the time because they don't need the money. If you're a desperado looking for money, you won't get it. So we want to go to the bank right now where we don't perhaps even need the money and establish the relationship. Who's following this conversation here with me? Perfect. Let's have a look at this, Shane. So 2, understanding the difference between good debt and bad debt and fridge debt. What's good debt? Good debt is deductible is one of the issues, and grows in asset. That's right, it's a growing asset. So a good debt is any debt that the asset's growing in value and you can get a tax deduction for it. A bad debt is any debt where the asset is actually depreciating and unfortunately you're not getting a tax deduction. Just to show you the extent of this, if a debt like a home loan, which was 7.5% interest, just say, which a lot of people think is a good debt, and let's just call this $7,500, I'm just making this as a round number, of an interest payment. If this was your home loan, generally it's not a tax deduction, therefore fails at least one of the criteria, even though the asset itself's going up in value, the house hopefully, the interest isn't. So to be able to pay this payment, this $7,500, this is known as a net payment. In other words, net after tax. So the real interest on this loan is more likely a higher amount, which is your gross income before tax, which if you're on the highest tax bracket in this country would be probably something like 48% plus, so 50%. So, and it wouldn't surprise me that the amount of payment that you would have to save to get this in gross income would be $14,000, and that you may pay something like about $6,500 worth of, is that right? Yeah, $6,500 worth of tax to get this amount net. Does that make sense to everybody? If I convert this 7.5 to 7,500, this is equivalent to $14,000 in your gross income. So I say to you, your real expense for this home mortgage isn't 7.5% interest, it's 14% interest, which is like a bank card, Visa card, MasterCard, very expensive. However, if this was a good debt, then the tax department would pay for a portion of it depending on your tax rate. Let's say you're on this tax rate, a 3% part, or almost 40% of this money, then your net payment would be $4,500 out of your pocket, which would be the real net payment you'd make. The tax department would pay the 3, and your then gross payment would be that. Does that make sense? So this is known as good debt, and this is bad debt. And the difference, we could say, is the difference between these numbers, which is a figure that you appear to pay to the bank, 7.5%, a bad debt, 7.5% is a 14% interest rate, a good debt is 4.5%. Big difference, yes? Big difference between these two numbers. So we're here to try and see if we can get as much of your debt into good debt. And part of our programs are to show people how to pay off their mortgages very quickly, how to become debt-free, particularly of bad debt. So I'm understanding those differences. And there's another debt in here called fridge debt. Now, what is fridge debt? This is the debt that we have. We have a little credit card stuck in a freezer, metaphorically speaking, and some people actually do this, which is just in case of emergencies. And so they might have a $5,000 credit card sitting in that fridge in case they need to act on something. And that money is a very, very powerful, if you like, security blanket for their needs. Instead of having money lying around in accounts that aren't being used, they get their money working much harder, have it working very, very hard, and start investing seriously and with great strategies and using money they've already got. Does that make sense to everybody? In other words, having the reserves, but having the reserves in case of emergencies available to them. So here's the little summary of this, what good debt is and what bad debt is, and also we discussed those different categories. So that's for you to read through. Let's move on. The third step is to create the little satellites. These are the intentions for your wealth account to create businesses, real estate, share trading, superannuation funds, and much more. These will include buy and hold positions in real estate, buy and hold shares, transactions, plus businesses and real estate and equities. And later we'll go into our transactions that we have both in trading and in passive income streams. Thank you, Shane. This is a little drawing of what that may look like, going right back down to the wealth account, and these are what we call little satellites coming off. The first three are the very important ones I want to talk about. And the first one of this is a real estate account. And this is, in this case, we're using Westpac, and please hear me, I'm not trying to publicise Westpac or promote them. Just I'm using any bank. This is Commonwealth Bank, share trading, little credit card off it, business account, NAB, little credit card, and your super fund, an ANZ. Now again, these could be any banks. Later, you will have buy and hold share portfolios. In this case, it was St George. Buy and hold real estate. In this case, it's Bank of Queensland. New businesses. This is Citibank. Now, why am I using all these different banks and why are we doing all this? Because as you sit here and think, you'd say, oh my goodness, look at all the fees. It costs about somewhere between $70 and $100 a year to have a check account and a credit card. Sometimes less, sometimes a bit more. It costs thousands and thousands of dollars, certainly hundreds and hundreds of dollars, to unscramble the egg when you go to see the accountant with the mess. When you're building wealth, real wealth, you have a separate account. So your real estate transaction that you bought that property in, that has all the expenses of the property, all the tax deductions, everything that you did with that is in one account, and it's in that one account. Does that make sense to everybody? So if you go off to Officeworks to buy a new piece of equipment for a computer or a pen even, or anything in relation to that real estate transaction that will be tax deductible, you buy it with your credit card, you have a perfect record, and you've got it all there for you. And so it's all in one box, not the shoebox of stuff, it's all in one account, which is a statement account and shows you where you are. If you're doing a share portfolio, you're trading, on a share portfolio, you've got an account that you're trading and you're buying and selling, and again you've got a credit card and you buy something to do with that. Anything to do, you catch a plane to Melbourne to visit the NAB general annual general meeting, and you stay overnight to see that meeting. The cost of that cab fare, the airfares, cab fare from the plane, from the airport, the expense of the hotel, all those things may be tax deductible subject to your particular circumstances. I don't know what they are, and today's discussion certainly isn't to give you advice on that. However, there could be some deductibility, and at least you will have a record whether you wanted to claim that or not. It's certainly clearly in that one record for you. Is this making sense to everybody? And similarly with a business, if you've got a business, you've got it set up there, and same thing with your super fund, obviously a separate account. Have we got another slide on that one, Shane? The reasons. Okay, let's go through them. Thank you. The first one is intention. Putting out there to the universe that you want to build. It's almost like a mini page 30, and those people watching this may not have seen that, but our page 30 is our 7-year plan, what we want to build. And one of the things I'm sure we're going to build is real estate, another thing's going to be share trading, another one's going to be businesses. And so by opening 3 accounts for those, we're actually making a statement that that's where we're going. Now you might think, gee, that's outlandish. Well, we're spending big time. We're opening a bank account, a check account, and we're putting a credit card with it. And we're putting an intention out that we're going to follow through. You don't have to do this. What I'd be saying to you is that there's other reasons, not only for that. That intention's pretty strong though. The universe hears you. Thank you. The second reason is relationship. Our whole program's based on relationships. And we create relationships with each of the banks so that we can, when it comes to borrowing, we can do it with ease and grace. We don't want to be going to the bank in a year's time saying, hello, I'd like to get a loan. They say, who are you? You can say, I've already got an account with you. I've been using this funds for some. Oh, good. How much would you like? Can you see there's a very different relationship with that, and they're part of this cake and they want a slice of you. Thank you. The third area is your credit availability, creating an advanced credit facility up to $50,000 to $60,000. Never buy an umbrella on a rainy day. Always ask for money when you don't need it. What does this mean? If you've got 6 credit cards with $10,000 on each of them, you've got $60,000. And for some of you here right now, $60,000, you're already starting to think of some things that you'd like to invest in. Am I saying you should just have interest for interest's sake or borrow money for it? No. This is real money and you need to be very, very cautious with what you do with it. What I'm suggesting to you, however, is when the transaction shows up, will you? Because transactions show up and you don't have the money, then you try and look around. By the time you spend 4 weeks or a month or 2 months trying to get the money, the transaction's gone. Who's following this conversation with me? Now, we want to do this very cautiously. We want to imagine that this money is in the bank and it needs to be dealt with. And also, there will be interest and aspects to this we have to take into consideration in your cash flow. That's why your strategic spending is so important. That's why this whole system is an integrated thing, not in isolation should it be looked at. And we're also looking at the tax deductibility of some of this rent. Some of these interest costs. Thank you. Let's do number 4. Credit rating. The step-by-step approach would have your credit rating enhanced by your skill of management of your money. A lot of people are concerned with credit cards or any kind of borrowing, any kind of situation like this, and the reason they are is because they're concerned that they'll spend the money. They don't trust themselves. The Ferrari won't kill you, it's the lead foot that's driving it that probably will. The credit card's not dangerous in itself, it's who's using it. And in this program at OneLife, we're really wanting to teach you responsibility and discipline around money. Hiding money from you won't help you. You'll find it. So what we want to do is teach you how to act responsibly, very carefully, step by step, very, if you like, baby steps even, on how to build your wealth, and you are going to use other people's money to do that. And you've got to get used to the idea of being very responsible about that. Who's following this conversation here with me somehow? Well done. Let's have a look at the next one. So number 5 we should be up to, yeah. Be a smart investor, use other people's money, particularly the banks are offering nil interest rates of 6 months and beyond. Some of you may know this, that different banks trying to get a slice of the cake are trying to get you, and they'll send you a document to say, we'll give you interest-free, we'll take over an existing credit card of some other bank, and we'll give you interest-free for 6 months. Who's aware of that, by the way? And they do all sorts of things, different months, different times. If you go on their website, you'll see the different things that are available. Started off with, I think Virgin did it at 6.99, then they did it for 2.99, then they went down to nil. Then other banks got into the act. And I noticed the other day Citicorp were doing it, not for 6 months, they'll do it for 9 months. I had a client who borrowed and paid for this whole program, and then got a bank to take over the loan, didn't pay any interest for 6 months, and then Citibank's just taken it over for 9 months. So for 15 months pays no interest. Now, that's being kind of clever with money. It's not going to solve all your problems, Is that better than paying interest? What do you think? And all this is about is they want to get you. They want to get you as an account. And that's okay. If you know how to play the game and you know what the game's like, then you can play it. You want to play it knowing how it's played, looking down on the game, knowing the rules they want to play by, and then you can play by your own. Because some rules you can bend, some rules you can break. Okay, let's have a look. Business records, using your credit card as a record. Now that's very important because you then know whether a transaction is truly profitable. There are a lot of people who buy and sell real estate, buy and sell shares, and they talk about their gross profits, but they're not really being honest. They're not really being clear about what their profits are. When we make a profit, we want to know what really was the profit. And the way to do this is by having absolute records. So we're being clear. We're not, confusing ourselves or trying to pretend. The truth will set you free. When you know what you really are up to, then you can really handle this properly. And you're taking all things into consideration, including the brokerage and the other costs and all the bits and pieces, including interest. Thank you. How profitable are you really? Which is the same as number 6 in 1.6. You've got a business record, but you've also got the profitability. The system shows you how profitable you are on each transaction and how it really is working out. Thank you. 8. The Australian Tax Office currently will accept a credit card as a receipt of evidence of purchase because beneath that is all of the documentation, and it's very, very clearly if Bing Lee provided you a computer for X amount of dollars, you probably bought it and it's on your credit card, so you've got possession of that. So they usually accept that as realistic. If we want to get the actual receipt, we want to get all, we can go that far. If we drew a line in the sand from now on, stop using cash, stop using these things, you automatically have much better records of your expenses. Does that make sense to everybody? Although you might get carried away with your old thinking about, well, the little fees and stuff. Relative speaking, this is a very small game. You were playing a bigger game, and we want to lift that game. We want to set a new standard for our wealth. I'm not trying to be silly with the money, I'm just trying to be very responsible for it. And I think you'll find, that someone might have said to you, look after the pennies and the pounds will take care of themselves. Well, if you look after the pennies, before you know it, you've got $1.20. What we want to do is look after the hundreds of thousands of dollars that are getting lost here. Thank you. The next one. 9, time management, which is really where it's all about. Your time is your greatest asset. So eventually getting a bookkeeper to understand these accounts. For $30, $40 an hour, you can get a bookkeeper to do all this for you, so you don't have to do it yourself, but I want you to understand it, so at least you take absolute responsibility for that. Thank you. So is that it, Shane? Oh, here we go. Warning, just about credit cards. Must use them with discretion and precision. And this is the maturity that is required for you to meet your financial freedom. And really, what this is about is just stepping into responsibility and not doing blame and justification or being too frightened to act. All wealth is about action. It's not about saving money. Wealth is always action. Thank you. Accept the truth that you are quite capable of making wise decisions about your money, and from this moment on, if debt is necessary, let's at least make it good debt. And debt is very, very good if it's good debt. And what it needs to be done is to be managed. We need systems in there, the systems that we are helping you with, called strategic spending as an example, and cash flow planning, also areas such as your benchmarking that we're teaching you here, to really take on your financial freedom. It's very simple, nothing complicated, very step-by-step approach. We're going to start off with the most ordinary things, like using credit cards. It's not our long-term plan to have all your funding through credit cards. It's just a beginning. And what it is really, it's about, we're going to have many stages of different kinds of borrowings. Smart people use other people's money, lazy people use their own. And it's only because they have got a fear associated with money, because they're not actually sure who they are, they're not even sure whether they can handle things, they're not even sure about a lot of things around money, they don't even understand what money is. Money is energy and consciousness. It's not pieces of paper with pictures of dead people on them. That's just what money looks like. Money is actually an idea. And it's actually a flowing energy, an energy that can be utilised, and money's always looking for a boss. Money will amplify whoever you are. If you're a really nice person and you have more money, you'll be a nicer person and you'll be giving more of it away. If you're not a nice person, you have more money, you'll be worse. So it's not about making you better or worse, it'll just amplify whoever you are. So my hope is that the people watching this, and you guys are good people, that's my experience, and more money will give you better choices in that. More credit, more facilities, more decisions you can make to actually enhance your life. Thank you, Shane. Step 4, which is really the action now. Start with 3 accounts and slowly build them. And those people watching this, I'm talking about going out there and actually doing this now. Focus upon your wealth account and your satellite intentions, that you will have your business, your real estate, your share trading and your super funds in them. I like to start off with fresh accounts. That's just the way I do it. Have your money automatically transferred into the transfer account, and from here build your wealth, your cash and your operations account, and operate your accounts online with the beginnings of financial freedom. You will create an automatic millionaire advanced accumulation program. What that means is it's not waiting for you to automatically transfer money all the time into your wealth account. It happens automatically. And by it happening automatically, in a lot of ways it's set and forget. You probably found that you have an automatic accumulation going on with your superannuation fund. What's happening is you're not noticing, but the boss is taking out money out of your account and putting it into an account. And some of you aren't even noticing what's going on with that, but obviously it's being accumulated and it's being built. And some people turn around and find, gee, I got $60,000 in it, I got $100,000, I got $200,000. And that's great, and that's what's automatic about it. It's just a very, very slow system, and more importantly, you're not actually in charge of it. Whereas this is the same system, but you are actually having an intention and attention to something that you are in charge of, and you're making it as automatic as you can to help you build wealth. Does this make sense to everybody? Good job. Let's have a look at this. So that's just back to there. And we're just showing how that all works. Okay, so here we go. Remember, wealth is created by action, not by saving. And so a saving is important. I'm not saying you shouldn't do that, but that won't create your wealth. That's just an accumulation of some money. Real wealth is about the actions you take. You need to do this if you are serious about being successful. In other words, there is a step to take that needs to be taken if you're serious about building this wealth. Miss these steps and you will be like baking a cake without the recipe. It'll be a bit of hit and miss. This is a recipe to build wealth, and I want you to follow it as a step-by-step process. I'm also asking those people watching this and the people here to sit down with a licensed financial person, financial planner, to really make sure that we're all on the same page with this. This is a very important part, that we're keeping our recipe within the bounds of it, that we're not going off and doing crazy things, and we've got a very basic first step here to build this wealth, and I'm sure this will be pretty straightforward for everyone. Follow those steps and you will have a very spectacular and delicious cake. Now, this cake needs to be monitored. When you put it in the oven, you just don't leave it there and forget it. You come back and check, and although the recipe says all the things, by rights, 98% of the time and 99% the cake will rise and be what it is. We want to take the cake out and we want to put the icing on and the candles, and we want to taste test. And you want to check in that this recipe is working and the ingredients, and in time you'll be able to even take a few little extra risks with your baking procedures and add a few more spices and a few other things. Is that it, Jane? That's good. Let's get the lights up here. So all this is about is a beginning of financial freedom, the beginning of you taking charge, a beginning of the bank not taking charge of your money. Those automatic things that the bank does where it mixes your money up, those kind of automatic things are very, very hard for you to follow. For the majority of people that I see, when I go and talk to them about their money, most of them don't know where they are. What percentage of the population spend all their money or more than all the money they earn or more than they earn? Just any number might come to mind. 95% do that because they're not actually in charge of the money. The tail is wagging the dog, and what I really want you to do is wag your own tail. This is just the beginning of a number of steps. There's about 27 of them that I want you to take, and this one is just the beginning. I want to thank you so much for watching this, and I'm looking forward to seeing you one-on-one. Thank you.